I want to start with Tesla. I'm leading the Mag 7 stocks lower. Shares have been down more than 5% this morning. Its first quarter deliveries expected to release Wednesday, but it snapped this 9-week losing streak last week. And you had Elon Musk. He was at a town hall event in Wisconsin over the weekend, and he said that his Doge roll, it's costing him a lot. His words, Tesla shares rose to a record high in the month after Trump was elected. But here's the thing, they've dropped 45% since their December 17th peak. And then you go to Musk's own personal wealth itself, declined by more than $100 billion this year.
I mean, basically, Paul, hold is a sell, right?
Yeah.
On the A&R screen, on the terminal, I got 33 buys and 27 holds or sells. So it's a huge debate.
Which to me just raises the question, why do we have 60 analysts covering one stock? Granted, it's Tesla, but do I need 60
there's some
opinions
people
out
at
there?
BNP Paribas underperform, HSBC reduce, Hedgeye risk. Good morning to everybody over at Hedgeye, Wells Fargo.
No, but Elon's right. I mean, he admitted it over the weekend. It's his Doge activities.
Adam Jonas over at Morgan Stanley, he always gets love. He's got a price target. Lisa could make money at this, up 410. The next mover, please.
These are, stick with me here, because these are investors exposed to the AI trade. So, for example, Palantir shares have been down as much as 7% before the bell. One of the reasons that I found, the Pentagon actually canceled a $280 million over-budget HR project involving Oracle. Now, the reason why that matters to Palantir is because Palantir relies on these government contracts, including those with the Department of Defense. And Department of Defense recently announced an additional $580 million in budget reductions. And then you, of course, also had Goldman Sachs analysts maintain a neutral rating, but they talked about concerns about the potential future competition from companies developing in-house AI. So then we hit Palantir and we go to Nvidia. They've been down about 18% on the year coming into today. Disappointing IPO from the companies that it's backing. CoreWeave, remember we talked about that last week? Yeah, when that came out. It began trading Friday. Shares fell below its offering price of $40.
But
so that's why those
it's
shares.
funny, though, that they got that stock to close at 40.
At 40,
Friday, ready to close. You know that the desk was working hard, the underwriters, to get close. I don't want this thing to close down. Make sure you find something to push the stock up to 40 at the close, and they did.
And
so we'll see how it trades today.
And we'll say, and finally, we've been talking a lot about gold, right? That's hitting a record. Newmont Corporation, they're the leading global gold and copper company. They're known for its extensive portfolio of mining assets. Since we've been talking about gold, we're reaching that fresh record high, rising above $3,100. So you see this a lot. I mean, investors making these defensive plays over policy uncertainty about the U.S. tariffs. So they're going to this safe haven, and that's why you have Newmont Corporation. Their shares have been up probably about 1% this morning.
12 months up, 37% up. How many companies can say that?
Yeah, exactly. And this year, after 23 and 24, were great performances.
Good morning, Denver. 22,000 people. Newmont Mining.
Yep.
I mean, I don't know.
The
What else? Do you have a fourth one, Lisa? Is there an audible here?
Here's an audible.
Movers?
Yeah, Moderna. Moderna's been down, about 13% in trading before the bell opens. The reason why, here's something interesting. The resignation of Peter Marks, he's a top regulator at the U.S. Food and Drug Administration. He has been overseeing approvals of vaccine and other biological drugs. So he resigned, and now you have those Moderna shares plunging about 13%.
Well, I've got one for you. Yum Brands said Chief Executive Officer David Gibbs plans to retire from the fast food chain next year. So I asked Michael Halen, who covers the restaurants for BI, I said, is this a big deal? And he says, yeah, it's a big loss. Yum, especially Taco Bell,
right? Yeah, Taco Bell
has been a great incubator of talent, but a lot of that talent has left in recent years. He says Starbucks, Brinker, Shake Shack, Cracker Barrel, El Pollo Loco are all run by former Yum employees. How about
this
that?
Is too much. Lisa Mateo, Paul Sweeney, Stock Movers. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers. Listen on Apple, on Spotify, anywhere you get your podcast. Good morning.